According to supply managers in the 9 Mid-America states, how is the economy performing?
According to our survey of supply managers in 9 Mid-American states stretching from North Dakota, Minnesota, and north to Oklahoma and Arkansas in the south, the index was down dramatically. And it was the lowest in 3.5 years, but it's still above growth neutral. The 32nd straight month that we've had a reading above growth neutral, but the overall index came down. I don't know about dramatically, but it came down from June's 55.4 to July's 52.0, and again, it's the lowest in 3.5 years. So what this is pointing to is slower growth, and that's what we're seeing at the national level. Here I'm bringing up the overall index, you see, and there you see quite well that the Mid-American number is down, and down to its lowest level again in 3.5 years. The U.S. number comes out later on this morning, and that's very important. That number is, as you can see in red, the red there, it's been trending downward, and if it moves below growth neutral, it could be a bad day for stock equity markets or the stock market. So keep an eye on that. Keep an eye on our number, which you see here, but keep an eye on the U.S. number, which comes out later on this morning.
What negative impacts are labor shortages and trade issues having?
The factors pulling the overall index down has to do with trade, global trade, and the global economic slowdown. For example, our export reading for the month of July was 44.7. That's well below growth neutral. Import number, 43.8, well below growth neutral. Of course, labor shortages continue to have some negative impacts on the businesses that we survey, and this is true for July, but it was also true for June and May as well. So again, and we ask about how the trade skirmishes, war, if you wish, the impacts on the businesses, and 54% indicated that it was making it more difficult to buy from abroad. So that's having some real negative impacts. Two-thirds of the businesses indicated that these trade skirmishes, wars, tariffs, restrictions, whatever you wish to call them, are having a negative impact on their business. So that's 2/3, 2 out of every 3 purchasing managers, supply managers that we survey for the month of July.
Describe the impact of tariffs.
Well, the tariffs are just raising the price of goods coming in by the supply managers, and again, it's having quite negative impacts on these businesses. But it's also, we've seen retaliation among our trading partners, whether it's China or in some cases even Europe. Because of our restrictions, they raise their tariffs or restrictions, and what that means is it slows down our exports, and that spills over. And for example, again, hiring, it slowed down hiring for July. The hiring number for July was 56.3, and that's down from June's 58.9. So hiring is slowing down as well. The hiring also, if you look at year over year, that's from the last 12 months. The U.S. number is much stronger than the regional number. The regional number is about 1% year-over-year growth. The U.S. number is about 1.5%. So we're seeing some slower growth here, and the reason is this part of the nation depends more heavily on agriculture. Agriculture depends more heavily on the global trade and exports.
What impact is inflation having?
Right now, until this month, the overall inflation gauge was up from 59.1 for June, which is modest, up to 71.9, which is a little stronger than modest. And that's, if we see inflation trends move upward, that would be real trouble, because the Fed is cutting interest rates. They cut interest rates this month. The market is counting on additional rate cuts by the Federal Reserve, that's short-term interest rates. If inflation does come upward, and right now I'd have to say our survey is maybe an outlier. I don't think this is going to be repeated. So inflation remains constrained, but the number for July was a bit stronger than we'd like to see, or I'd like to see.
What are the biggest economic challenges companies are facing?
Number one, of course, is the lack of finding and hiring qualified workers. Number two is global economic slowdown. That's really spilling over. The U.S. economy is the strongest on the face of the earth right now, the major economies, so that's certainly a big issue. and we'll see those tariffs. The tariffs really we haven't seen it much rolled into prices. We'll probably see more and more of that as companies begin to roll that into prices. So that will be another factor that's going to slow the regional growth, slow the U.S. growth.
What are some areas of risk that we need to monitor?
Big time risk is, of course, the negotiations with China. If, for example, the Trump administration says we're through, we're over, that's it, we don't reach a trade deal, that would be very negative. And we could see, of course, the Trump administration raising tariffs. Another thing to keep an eye on in terms of risk, we look at the jobs report. It comes out August the 2nd, of course that's tomorrow, and see how many jobs we added for the month of July. That's very critical. Also critical is wage number beneath that. It's part of the BLS, Bureau of Labor Statistics jobs number. The wage number is very important. It's been moving 3 to 4%. That's in a pretty good, I'll call it a Goldilocks range, not too hot, which would inspire inflation, which would inspire interest rate hikes, and not too cool, which would be below 3%. So we want to see it in that range. The Case-Shiller Home Price Index comes out on August the 27th. We're seeing that, and it's underreported, some real issues with the housing market. And the housing market's continuing to slow to some degree. But even with these lower interest rates. So those individuals that are listening to this report are thinking about higher interest rates or lower interest rates on mortgages. I would get the mortgages right now. We could see lower interest rates, but that'd be on the order of 1/10 to 2/10%. On the flip side, we could see higher interest rates, and that'd be 0.5% to 1%. So if I'm looking for a house, if I'm selling a house, right now is a good time to sell because of mortgage rates. Finally, the big number coming out again later on this morning is the ISM reading. That's the Institute for Supply Management. Their survey of purchasing managers. Then look to September the 3rd. That's the first business day of September. Watch our report, because again, it's been trending downward. What's the U.S. number? It's been trending downward. Those are becoming very important. It's a signal of what's going on in the manufacturing sector, and the manufacturing sector typically leads the overall economy. So those are things to watch. Watch the 10-year Treasury. That's the yield on the 10-year Treasury. That number has moved sometimes below 2%. If it moved below and stay there, it's now slightly above 2%. If it moved below 2% and stayed there, something's going on, meaning higher risk. What happens is you have a safe haven buying. Investors are trying to find safety, and they look to our bonds for safety. That drives up the price. The yields come down. Now, if on the other hand that yield rises up, that's an indicator of potential inflation, and that's another concern. So within this band of 2% to 2.2, that's what we're going to see. Outside that band, I'm concerned. So, that's our report for the month of July. Here we are on the first business day of the month, and till next time, may your economic cup runneth over. Thank you.